Welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, November 15th. Last week, the S&P 500 broke a 5-week streak of higher closes with a slight decline. Now, despite the small sell-off, 30-day realized vol for the S&P 500 index fell below 10%. On a weekly basis, the VIX index has remained very close to 16.5 for the last 3 Fridays. On Wednesday of this week, the November VIX futures and options will expire and cash settle. The November contract is trading around 1730 as I sit here. The December futures are around 2020, so that spread is out to 290. The spread continues to widen. Now, if we look at the December-January future spread, that's already $2 wide, and that will become the month 1, month 2 spread later this week. Shifting to interest rates, the yield on the 10-year U.S. Treasuries moved back above the 1.60 mark this morning. The October highs for that measure was 1.67%, and the 2021 highs occurred in late March at 1.75. We'll keep our eyes on rates and the term structure for Treasuries going forward. Shifting to the economic calendar, this week is relatively light. There will be a number of data points around the housing market, and tomorrow we'll get a look at retail sales ahead of the most important time of year for many retailers. The National Retail Federation predicts a record-breaking year in terms of U.S. holiday spending. They point to increased wages and relatively high savings rates as potential catalysts. SIBO's Inside Volatility will come out tomorrow. It calls attention to the significant activity in Russell 2000 index options in recent weeks and months. We also look at daily vol-adjusted standard deviation metrics and the recent disconnect between interest rate vols and equity vols. Visit SIBO Insights, click on Volatility if that's of interest. That's Volatility 411. Thank you very much for tuning in.